If you want to know what's happening with the stock buybacks as well as the central banks printing money, watch this video. Despite record-level monetary injections, the stock market is stuck. There should be maximum, persistent, increasing in U.S. equities in particular. Central banks around the world are printing money. Share repurchases are at a record level, and interest rates are near record low. There's really no excuse. Though, once the China and US trade deal goes through, markets will likely rocket higher, but it keeps getting delayed further and further. You came here for the truth, so let me unveil that for you. Today we're going to look at some interesting issues that typically are not discussed in the mainstream financial media. I want to talk about what the central banks are doing. I want to show you what's happening with US equities on the inside. Let's begin by taking a look at the markets. Here you can see the stock markets, particularly the US markets on the right-hand side. What has happened? The S&P 500 had been flirting with 2,800 all day. It seems to not be able to stretch over that line and close over that line. However, this is an important number. 2,800 on the S&P 500 is now a quadruple top. So I want to show you this on the chart here. You can see that this has been not 1, 2, 3, but now the fourth time it has hit this level without being able to go past it. I do believe that if we have a trade deal that is completely resolved and all those issues are put behind us, then we will definitely see the markets go higher, at least for the short term. Who knows what will happen in the long term? However, this is what I project will most likely occur, okay? Because we have seen everything leading up to this point, but they've been pricing in positivity for the most part. So that has already been put in. So I don't know how much necessarily it can rise, but this is one of the things that has been causing a little bit of uncertainty with traders today. But those who are informed are aware that it's not the average investor that has been buying stocks today, which has resulted in such an incredible set of gains since late 2018. In fact, big investors have been selling. Estimated pension rebalancing flows. Take a look at the very left-hand side, and you can see this here in the number of billions. Negative $25 billion for U.S. equities, and we are looking at this data out of Morgan Stanley. Even emerging markets have fallen into the negative somewhat as well. But the asset month-to-date return is incredibly good for U.S. equities. So, of course, there is a disconnect. Now, if you haven't seen it already, I'm going to mention it again. Go to the end of this video where I have another video that I did that completely breaks down exactly why this is happening. You need to understand what's really going on here. We've got share repurchases that are happening at record levels, and we are seeing over $200 billion per quarter that is being put back into these stocks. Imagine that, $200 billion, not real investors, not average people, not hedge funds and other types of investment companies. No, stock buybacks. That's what we're dealing with today. And of course, as I documented on a previous video, the rate at which we saw throughout 2018 was a record level. It was over $1 trillion worth of share repurchases. In 2019, for the first month, we had seen a level that exceeded January 2018 by 91%. So this is excessive, even beyond what we've seen at record levels. So of course, the stocks can rise, but people don't understand that. And actually, I think they don't really care. As long as their 7 shares of Amazon continue to rise, then they're doing good. There is more to it, of course. You got to check out that video and see it for yourself. I'll move on to this. Out of the St. Louis Fed, Bullard, who is probably the most aggressive of all of the people at the Fed, he said this: with the policy rate near zero, the effects of QE may have been substantial due to signaling effects. Now, with the policy rate well above, apparently where the Fed is right now is well above zero, any signaling effects from balance sheet changes have dissipated. Okay, let's break that down for a moment. Balance sheet shrinkage QT does not have equal and opposite effects from QE. Instead, one may view the effects of the unwinding of the balance sheet as relatively minor. How many videos have I done where I have completely correlated the global balance sheets of the central banks to the stock market? How many times? Please tell me in the comment section below. Has it been over 100? At least, as far as I'm concerned, as far as I'm aware, countless instances. In fact, sometimes I talk about it every single day. But apparently it doesn't have much of an effect. So if that's the case, why not shrink the balance sheet? If you're not worried about the effects, then why not just shrink the balance sheet? Do you remember a little while ago how these extraordinary emergency measures were, quote, temporary? Do you remember that? Of course you do. But apparently those at the Fed tend to forget. That's right. Well, we'll just forget about that. We're going to keep balances excessively high. Don't worry about it though, because it doesn't have the same effect it did before. I'm tired of being lied to. I don't know about you, but this is a spit in the face. I just wanted to focus on the green line. The global money supply had contracted somewhat, but it is now back on its charge. I actually was surprised somewhat to see that there was any decline at all, but let's take it back a little further. You could see throughout 2018 how this was in fact coming down, and then towards the end of the year we saw it rising up further and further. Now the ECB, for one, said that they would stop printing money at the end of the year. So here's where you see the end of 2018, and we should have had a contraction with the central bank balance sheet in that case. Okay, and then we had China, which didn't really announce anything up until the last second. They didn't have any sort of announcement being made to let the public know what they were planning on doing, or at least what they were thinking. But at the last second, they decided to print. So we're going to talk about those two now. I'll show you those on charts. First, I want to talk about the Fed. We have now made it to under $4 trillion. Congratulations to the Federal Reserve. This information is as of February 21st. That's the latest numbers that I can find directly from the Fed website. And you can see that there was actually a considerable drop in this particular week. And although every drop should be like this, they are being very, very cautious. This was probably a one-off. It's based on their schedule. It's not as if they did this as a surprise, but I just wanted to show you that. Finally, congratulations, Federal Reserve. You're under $4 trillion. That's so wonderful. But let's take a look at the euro area. When you think about it, you have the ECB, you have the Bank of Japan, the Bank of England, the PBOC, and so on, all of them printing money. And then you had the ECB suggesting that that was it. 2018, we're done. It's not going to happen anymore. Well, I'd like you to take a look at this. This area here is December 2018, and you can see how it goes even higher after that. They promised, but they didn't keep their promise. I can try to put my mouse over to give you an actual accurate measure. So this is based in euros, and we're looking at 4.669, and then this moves up to 4.695. So it did move up, quite a big jump there, and that is going in line with what they've been printing over the last year, as I show you on this chart. So that shouldn't be a surprise to anybody. They lied again. Who knows what they'll do in the next few months? I don't know exactly what they're buying in this case here. I need to break it down a little further, but we've seen them do everything for the most part. The CSPP program, the corporate sector purchase program, buying the debt of corporations. Imagine all of that, where you can see a bailout that goes on for eternity. That's what it is. You're buying the debt of all of these corporations. Now, is it failing institutions? Some of them are, definitely, but it's basically everybody. Think of a name in the Eurozone, they're bailing them out. That's literally what's happening. I've documented before on this channel in previous videos. Then we had this. China injected a record amount of capital into their system. I never even showed you the final total. I did show you at least on one, probably two videos where the injection of capital became a record high, and then it went even further beyond that. And I believe this number references 4.6 trillion yuan. So when you see that, understand that compared to the total amount of money that the central bank has printed, it's not a life-changing event, but it is a record amount put into the system at any given time. So that's something that we need to understand. We have central banks printing up money at record levels even after they went through this whole quantitative tightening. It's going to happen. That was 2018. Apparently, as of the end of 2018, that's done with. Quantitative easing is back on the table. So we have quantitative easing taking place with every central bank except for the Fed. They're the only ones that have declined in their central bank balance sheet that I have seen. And then we have the share repurchases at absolute record levels. We have interest rates that are near record low globally, no matter where you look. And many central banks have started to also talk about reducing interest rates. They have reduced their requirements that the banks need. Don't worry about all those reserves. You're not going to need that. The banking rules have been relaxed, as we have seen in the United States somewhat since the financial crisis. And of course, this is going to be met with disaster. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you are supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, these two books have everything that you need. You can get all the details in the link in the description. And don't forget to check out my audiobook as well. If that's your thing, it's at themoneygps.com. If you wanted to know exactly why stocks have risen, I have a video which documents it specifically. Check it out, click this link, and I will see you there.